Hi, everybody. Welcome to Deep Practice for October 24th, 2019. Got a full house tonight, so let's get going here. We've got a member question. We'll do our normal tracking of the cable, taking a look at it. We'll do deep practice and then take a look at the current markets. So the member question, kind of a long question. I'll get to the chart in a minute. But he said this 60-minute time frame was trending, but I took a short, and I'll show you roughly where he took the short, right there. And right on the demand line of the uptrend. So it was a bad place to short. I got hypnotized. I saw price getting near a previous high made on the 8th of October. We had a downtrend line crossing on the daily, crossing yesterday's high. I assumed it would stop price. When it approached there was shortening of the thrust and a big selling wave. And then on the next approach, we had two up thrusts and so on and so forth. But I can see that this was an impulsive trade, and I'm suffering from cognitive dissonance or something like that. I don't know. He says, I didn't take into consideration the TPO charts. This, I think, is market delta, which I really don't know. I really haven't touched in a long time, so I don't really want to comment on it. But he says, would you talk about the best way of coordinating the high time frame with the lower time frame when we see strength and weakness because of what happened in this trade? Seeing the signs of weakness on the 5-minute was not enough. Yeah, well, let's start from the top here. One of the things that I noticed in this person's request was the large amount of information he or she, I forget which it is dealing with. I think they sent me like 6 or 7 different charts showing, cumulative delta, which I don't really know anything about, and market profile, and all these different time frames, and so on and so forth. And he's got here 2 different kinds of volumes on the Weiss wave on the bottom, and it looks like regular volume on the top. So the first thing I would suggest is to start to simplify. Get rid of a lot of that stuff. You don't need most of it. You only need one volume, one or the other. Get good at one and don't worry about the other. You should know how to read both, but on the same chart, that's not a good thing to do. You don't need, and then you got cumulative delta on top of it. So you've actually got 3 different forms of volume, all trying to tell you information. You're trying to interpret it all. It's like having 3 different clocks and trying to figure out which is the right time here. So that would be the first thing I would suggest, is really start to simplify things and focus on one thing. It's not a bad thing to try to combine Wyckoff and market profile, for example, but you got to get good at them independently of one another, and then start to combine them. And you don't want to be making mistakes like taking shorts at support. And simplifying will help you start to focus in on the right stuff rather than trying to make sense of dozens and dozens of pieces of information. All right, so that's enough of that. So let me just say this here. Here, this market's been coming down, right? It's been on a downtrend of some sort. In here, there was some sort of a day or two of congestion, consolidation, and now the market is heading up. So when we break support in here, right? You've got to move down in here. I don't know exactly where this ends, but you've got to move down. This wave up looks larger than the last wave up. So you've got demand coming in. And I'm assuming that somewhere in here, it didn't go down any lower and instead rallied up. And then nice, strong volume coming in. Pick your volume, it doesn't matter. They both are showing the same thing here. They're showing strength coming in on buying, right? So your structure is going from down to consolidation to up. So it's not going to be looking for a short right in here unless it upthrusts this level here. And it didn't. It did not upthrust that. And instead, as it comes back into this, it's testing in here and testing this line. And it's successful on that test and then rallies on up. So you've got the end of a down move, larger buying coming in, consolidation, which gives larger traders a bigger opportunity to get more contracts in their long inventory, and then it breaks out of the congestion and the resistance and creates a new high in here, actually a new momentum high. And you're trying to short against that. That's not the way to. That's not. Whatever you were seeing in here, the weakness in here, sure, there's a little bit of weakness in there, but the overall strength is pretty clear. When a market is going to break like for example, this resistance line, it doesn't look like this. You're looking for it to break this support line, and it's not going to do it on, little price bars like that. Look at what breaks this resistance. A strong, very strong bar. And a lot of times you'll see it leading in. So for example, here we've got resistance over here. You've got a strong bar leading into it, and then it continues to come down. Now here's some strength, a strong bar to the downside, these are, right? Now you got some buying coming in, but look at what the result is. You get some effort coming in here, so the market, responds to it, but then doesn't do anything. There's no ability to rally, and it comes down again with strong bars here. We break this low, again on strong bars. We break this high, again on strong bars. It doesn't do it on this. It doesn't do it on those little types of bars there, okay? So, understanding structure is like really, really important. The delta, the cumulative delta, and all the other stuff that you got going on here isn't going to tell you anything about this, but the structure does, and this structure is going from weakness, down move, into strength, into an up move. So you don't want to be trying to stand in front of that. Excuse me, stand in front of that, because it really is. It's like a train going by when you've got momentum coming into the market, which you do here. All right, now this is your hourly chart, and you say, how do you coordinate these two when one seems to be strong and the other seems to be weak? I'm not really sure where exactly you were taking the trade here. You didn't really identify it, but again, we've got these little bars in here. If this was it, or if it were in here somewhere, these tiny little bars, and coming down. Okay, you've got some weakness coming in here, right? So the trade, you really wanted to take the trade in here somewhere, not way down here. You're looking at this trend line here. Again, this is structure. You're looking at this trend line. This is your supply line. You're looking for supply to come in. You see a little bit of supply coming in here. You see some shortening of the thrust between these two, right? Now market comes back up again, hits the supply line up here, and then starts coming down. So you don't have to wait for the bar to close and short all the way down here. You can short it in here somewhere. That's a pretty good move down, telling you that there's enough weakness that it should push this from one side of the trend channel to the other, which it does, okay? But notice how it's going down. What you want to see, if you're looking for supply, you want to see this thing start to really take off and start to break, supports with good, solid price action and good and a pickup in volume coming in. You don't really get that here. You get the weakness coming in, and yes, the market's weak, it's drifting down, but you're not getting strong bars coming out. You start to here, you get a little bit of a I don't know, hidden upthrust in here or an upthrust of some sort, but then it dies out as it approaches the support. So this is support, right? Demand line, the demand line and the supply line. This is selling or resistance, and this is support here. So we really never take a trade at support. And it's just, unless sometimes we might take a breakout. I don't even like doing that, but that would be buying the break of support, but not before it breaks. It's after it breaks that you buy the support, when it already confirms the break of the support level. So other than that, and even then, I wouldn't even think about that right now. For your purposes, you just don't want to be selling against support, and you don't want to be buying against resistance. Like, you don't buy up in here, right? You look at that and you say, well, why would I be buying up in there? That's resistance. Well, you don't want to be selling against support either. And you don't have, on the 5-minute, you're really not showing strength to the downside. As I said, you're not getting the strong bars coming down. And look at your volume is getting smaller and smaller as it comes down. So that's telling you that there's no strength to the downside on the 5-minute, right? And so if you go back to the 60-minute and you say, gee, there's no strength to the downside on the 5-minute, and we're at support, then the play here is to buy this, not to sell it, right? For at least maybe a test back up into here somewhere, or that kind of a thing. You'd be thinking about it. And then if it breaks there, which it does, notice how here we don't get the strong bars coming up. We get a little bit of back and forth, but it's holding support in here. Then it breaks, and then it takes off. So I don't know that I answered your question probably in the way that you might have been expecting or were looking for, but I really would encourage you. You got all the information. Yeah, and either one is fine. You can use either regular price bars or the Weiss wave, but I really wouldn't use both at the same time. You think you're missing out, but you're really confusing yourself. You're not missing to the extent that you're confusing. And that's, in my judgment, you're right on top of support here, right? Just like you drew this line here, and that was support, you wanted to draw a line here, and that's support, right? That's it for there. So probably not the way you were anticipating me addressing the question, but that's my honest answer to you. And I don't know if you're in the room tonight or not, but I hope that helps. Really though, simplify and focus on structure. Those are the really two things that I would suggest to you at the moment. Let's see, some other folks are going to suggest. Brian has some good ideas here. Create a checklist for each of your setups and keep it very simple. Not my words, this is Brian's, and Brian's very good at reading the charts for sure. Half a dozen points or less that you're looking for are your criteria. Then another half a dozen points or less to tell you when to avoid your setup. Now there's a good recommendation, right? Most of us only ever think about when is it okay, when do I want to we're like anxious, we're eager to get into a trade. We can't wait to get into a trade, so we want to zip through that criteria really fast. And no one ever thinks about what are the criteria to avoid this? What are the, I'm a psychologist and worked in medical facilities a lot earlier in my career. I don't do it anymore, but I did at the time. And we would have, if we were making a diagnosis, of a mental disorder, for example, depression or anxiety or schizophrenia, there were always rule outs. If I look at there's a manual of mental disorders. It's called the Diagnostic and Statistical Manual of Mental Disorders. I forget how many there are in there. There's a lot of mental disorders. And so a lot of them overlap because we don't have, just like in trading, there's not a lot of clear demarcation between, it's not black and white all the time. There's a lot of gray area in between. So you have to know what masks as that disorder. For example, what's similar to schizophrenia, for example. And how do you rule out, how do you discriminate between, say, schizophrenia and depression with psychotic features? And it's a big difference because the medications are dramatically different. And the treatment is going to be very different too. Even if it's talk therapy, it'll be different between those two. So I'm going off on a tangent, but every profession has rule outs. Every profession doesn't just look at one side of the equation. They're looking at both sides. And what Brian is suggesting to you is to look at that other side and have yourself a good, solid checklist of things that will tell you, like, if I'm really, really close to the supply line, then a short is not going to be in the cards. That's a rule out for my trade, right? And that's how you protect yourself. That's how you it's just another way to protect yourself. So very good idea. This would prevent you from taking an upthrust when there's a higher time frame jump across the creek in the immediate background, or against higher time frame support. Yeah, excellent. Very good. Very good, Brian. Let's see. Yeah, so don't feel bad about that. This is good. This is good news that you figured out you were doing something that wasn't going to produce for you, isn't very useful. And now you got a couple of ideas about how to start to overcome that. And it's to simplify things a little bit, focus on structure, and to develop a list of criteria that would keep you avoiding your trade. So that's pretty good for a good question like that. You got some. I hope you'd see it as good feedback, because it is pretty good feedback. And get excited and go to work on it. Sometimes something overrides the checklist and I go for the impulsive trade. Yeah, so do you practice mindfulness at all? No. Okay, so mindfulness is a very good thing to practice. We've got some stuff on the website somewhere. Also, you just Google introduction to mindfulness or basic mindfulness, and you'll get plenty of responses. As you start to learn how to do mindfulness, and you start to begin to realize that the things that we tell ourselves in our heads, all those thoughts, all that, oh, this is a great trade to take, I better get in now before it's too late, or I might miss out on this, or gee, it upthrusted and now I'm not getting in time and I better hurry up. None of those thoughts have anything to do with this trade. This is what mindfulness teaches you. And it teaches you on an experiential level. You experience it, which is important. You can hear me talk about it, and that's on an intellectual level, and you can think about it on an intellectual level, but that's not good enough. You have to experience it you have to actually experience it to begin to realize that your thoughts are not always your friend, and your thoughts are not always true. And many, 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 many times they're not true, and they lead you astray. And it's mindfulness that gives you the skills to both see that. First, you see it when you're practicing mindfulness, but as you get better at it, you start to see it in real time. not only to see it, but also there's two parts to mindfulness. One is the observation part, but the second part is the response part. And how are you going to respond? Are you going to just throw it all away and say, I'm going to be impulsive anyway? Or with mindfulness, with the practice of mindfulness, you learn to turn away from your thoughts and your emotions too, because the thoughts are driven by emotions. But the mindfulness helps you start to turn away from your thoughts and to focus on what's really important, which in this is going to be structure and price action and so on and so forth. Yeah, you can also, yeah, and Ted says you should point them to your book too. Yeah, you talk about these matters in depth with examples. That's true. There are a lot of common mental traps we have. The cognitive biases. I think you raised in there cognitive dissonance and all of that. I put a whole chapter in the book on all of that stuff. The most important ones, and cognitive dissonance isn't important in all of this. It is a little bit, but it's not where you're going to find the meat of psychological issues. It's going to be in other things. And I explain all that in the book. So yeah, and there's also mindfulness exercises in there, and quite a good discussion on all of this. So I would encourage you to pick up a copy of that if you can find one. That's where the discipline comes into play, to be Spartan and to follow the checklist. No. Discipline, discipline and a dime used to get you a telephone call, and that's about all it was good for. How many times do we say, I'm never going to do that again, and then turn around and do it again the very next minute, or if not the next day? I'm never going to say that again. I'm never going to blow up again. I'm never going to do all of those things. Well, what happened to the discipline? It's not discipline. Discipline is I mean, it helps certainly, but mindfulness, I guarantee you, that's going to be head and shoulders over discipline, and kind of grinning and bearing it and gritting your teeth and all. It's not the way to approach this. If you're wound up tight as a ball trying to not get seduced into taking a short against support, you're not going to be able to trade well. You don't want to be focusing on discipline. You want to be focusing on what the price action and the volume are doing. You want to be focusing on the market and identifying spots where trades might set up, and then watching to see if they do set up in the right way. That's really what you want. And if you're wound up trying to be disciplined and fighting your emotions and thoughts and everything, you're going to be focused on your inner world, not on what's in front of you on your screen. And you're going to be making all kinds of bad mistakes, and then you're going to get frustrated, and you're going to make those impulsive trades, and it's going to even get worse. So, I've been through all of it. Believe me, and worked with traders who've been through it as well. So take what you read from, about not having emotions and being robotic and disciplined and all of that, and just set it aside and take it with a grain of salt. That's conventional wisdom, and it's mostly not good. You really want to learn how to develop the skills to see past your thoughts. And the best way I know how to do that is through mindfulness. Yeah, hundreds of times, yeah, no discipline. Yeah, so see, there you go. So yeah, you find that it's really hard to, and it's impossible remote. Yeah, I've been a psychologist for, I forget now, probably going on 25, 30 years or so. And I've never met anybody in my life who's been able to control their emotions or their thoughts consistently. Never, ever. If you find somebody, let me know, because we would make history. You'd be the first person in the entire history of the world that's been able to do that. So instead of trying to keep doing something that's useless and fruitless, try something that works, which is mindfulness. You can't see the PL going up and down thousands of dollars per second without feeling your gut twist. Yeah, so sim trade until you get to the point where you don't have those feelings anymore. Okay, let's get on. Let's move on. But you get you've got some good recommendations and good advice there. So let's take a look at the cable. It's moving nicely off of that monthly spring. So you can see that, remember we were talking about how does a market break resistance or support? So let's just take a look at the daily here as we're watching this. So we have resistance over here, right? A couple of spots actually, one here and one here, one on the purple line, one on the blue line. Well, look at what happens on the purple line and on the blue line. Look at the price action going into this. This is what we look for to break resistance. You know, it doesn't really matter. Look at here's resistance here. Look at what breaks it. Here's resistance here. Look at what breaks it. Here's resistance here. Break it. Support here, that's what breaks it. You see? Resistance here, this is what breaks it. Resistance here, resistance here. This is what breaks. So you should never forget this now, and you should always have this in mind. You want to see, instead of being impulsive in your trading, this is what Richard Elliott used to call impulse waves. Impulsive, an impulse wave, right? Impulsive. Motive waves, impulsive waves. So take your impulsivity and start looking for impulsive type price bars to break old support and resistance. Okay, so anyway, I'm probably beating that to a fairly well here. So this should hold in here because we have such strength coming in. Look at the nice volume coming in on this up move. The price action is really good. So somewhere, around 12800 here, maybe a little bit under that. I think this line here, let's see, might come down and touch this. Let's see what we say here. All right, this goes all the way back here to, let me show you on the weekly chart. Yeah, all the way back to here. It's not a significant, but it's not significant support, but it did cause resistance here. And I would assume that it'll cause support here. So 2790, as the support level, somewhere in there. And then, I'm going to erase this stuff. And then a good move up into here. Let's say I'd say 132 is the next move up here into this area. That's what we'd be looking for next, right? So that's the monthly. So it'll take some time to get there. Maybe we would just be looking, let's say 132. I think that's fine. Yeah, that looks good. Yeah. Any comments or questions about that? This is a nice trade unfolding, and assuming that we continue to see shortening of the thrust, clustering of closes, volume receding, small price bars, as this thing starts taking off, it should be a nice, we should see a nice move up from here. And we're just going to keep tracking this, starting, and this is all started with this monthly spring here. So we'll see how it all unfolds. Hopefully we'll get up into 138 area at some point, but that's going to be a ways away. All right. Would I use the regular volume on 5-minute and Weiss wave volume on 60-minute today? No, I won't. I don't have it set up, and I don't like using it that way. Um, you want to use the Weiss wave. I mean, you can certainly use it on any time frame, but where it really shines is on the smaller intraday time frames. The intraday regular volume on a 5-minute chart is a little bit harder to read. Anyway, okay, so that's the cable. So let's get into deep practice. Here's a daily chart. What do we see here? And do we want to be a buyer or a seller tomorrow? What do you think? We're going to trade this intraday. And we're coming in here, and are we anticipating this market going down or possibly going up? What are we looking at here? And what are the key levels? So take a couple of moments and take a look at that chart. Peter says, I'd like to be a buyer. If that was weakness, we would have had no demand up bar. You're talking about this bar, I assume, here? You can see it is finding support at the top of the fourth bar from the left to the right. Fourth bar. Oh, over here. Don't, maybe. But that's not support. That's not really support, though. That's not really support. Give folks a couple of more moments here. This is not an easy chart. I will admit that, but I did that on purpose. Pranay says third bar from right side looks like a breakout bar, but last two bars give different picture sideways. to the right hand side. This looks like a breakout bar. Well, there's some buying there for sure because the market came down. There was a gap open, right? Came down, took out the lows here and the low here. Looks like it kind of hung up on this maybe, and then rallied up. So there was certainly some buying on there, but breakout maybe to the downside. Are you talking about? It didn't break out. It never came out of this. And I don't really know where the congestion is anyway. And then, but you're right. The next two bars kind of negated that. You're absolutely right. Trade Guider would mark the big volume bar as a shakeout. Maybe they might. Let's see. The up move ends with shortening of the thrust. Yeah, you see it in here really nicely. Really nicely. This draws out supply with a retest on no demand up in here. As we come up, look at that no demand. Yep. Then more supply on the second and third bars. It gets oversold in the down channel with some stopping action showing the buyers are active again on the second to the last day. Then over here, then the last day has some testing action with a drop in volume, though still relatively high. And there's no follow through to the downside on the last day. I'd look for lows to be made first at yesterday's low or the 2-day low on a weak pullback for a long. If it rallies weekly, showing highs made first into the shelf of resistance between 5 days ago. Yeah, in other words, in here, right in here. Then I'd look for a short, but my initial bias is long. Good, good. Yeah, we're in an up move here, and this is the first pullback. I'll talk about that in a little bit. Kevin says, looks like a selling climax on bar 2. Oh, I'm guessing this. But supply still in the market, so I'd look to short at today's high. There's a small access line there. Yep, there is going across. You can see it here. Picked up this 2 or 3 day low back here, and that formed the high. Look to short at, I'd look, hang on a second. So I'll look to short at today's high or buy no supply testing yesterday's lows. Okay, good. Oh, excuse me. I'm tired tonight. I didn't realize how tired I really am. Let's talk a little bit here about this. So yeah, I got, you can see there's a couple of, I've got A here and B, and then this would be C, right? So really tiny pullbacks in here, and this is the first good pullback that we're getting. But does it mean that we are, now that the down waves have gotten longer, maybe if we get an up wave that then shortens, and the volume is low on the way up and the ranges are narrow and so on, right, that we've been talking about, then that could be an area for a short. If we were swing trading this, and then we would be looking for something, maybe a target down in here somewhere. Okay, all that came to play. In other words, if the market came up to here, stalled, showed weakness, then we could draw a trend, and we shorted and it started to break here, we draw a trend channel in and we identify where the target would be. All right, so I say that because there is supply in this market, but we don't see overwhelming supply at the moment here, right? Ted's got some comments, hang on. Market starts coming down after a high, but it's coming down, as it's coming down, buying is also showing up, although we do make lower highs, lower lows on the second to last. On the second to last bar, we have a wide spread down. very high volume, but the close is off the lows and above the prior bar's low. The last bar has the same volume as the third to the last bar, same as this bar, right? But only 50% of the volume, I'm sorry, the last bar has the same volume as the third, but only 50% and no downside follow through. Not sure, 50% of the move, I guess, or spread. He's got volume, but 50% of the spread. Yeah, okay. In other words, the spread, he's saying this is, so we have the same volume and it's a down bar, right? We're coming down, or maybe it tried to go up. But why is it that this traded all of this and this only traded about half of that amount, but on the same volume? What does that mean? Does it mean people are trying to hold the market up, push the market down? What exactly does that mean? But no downside follow through. So there must be buying in this bar and on a close only slightly lower than the prior bar and a higher low. So I'm looking for a test of yesterday's low and a long initially. Key levels, yesterday's low, 2-day low, and yesterday's high. Good. Good, Ted. Wouldn't you consider the move from the first bar to the left till the top number one as one big wave? Yeah, I would. Wouldn't you consider A and B as retracements? They're still waves going down. They're still waves, but they're just very small. So, okay, so we have small waves. So this is a bigger wave, but before we can say supply is dominant and overwhelming, we have to see this either break this decisively. In other words, we come way down, right? So now we have a real sign of weakness in here. Or we get, as I said before, the weak rally up. And then we get a weak rally up and then we break the low. Then we're on a down move, right? Lower highs and lower lows. Anyway, we get the shortening of the thrust that comes in here, and then some weakness comes in on bar one. Not a lot of volume, but some. Bar two, volume dries up. We stop going down. Price pops up again. But as Brian pointed out, this is really no demand in here. It's not technically a trade guide or no demand, but if there's not enough fuel behind this, and this, we don't have wide spreads coming up, it's not going to be able to break it. So we talked about bar four before. We come down, we come back up, and a lot of volume. So suddenly the volatility picks up quite widely here. And that's when we hit this low over here at B. But bar five continues the down move and closes just below halfway. A lot of volume, could be somewhat climactic. Next bar comes in the last bar here, we're an inside bar. So this market has been coiling, and we don't know exactly whether it's been coiling to go up or coiling to go down. One way that we can find out, though, is we can consult the 240-minute chart. Oh, I'm sorry. So yeah, these are the key levels here. Yesterday's high. We're so close to yesterday's low. You can note it, but the 2-day low is a more important level down in here. Yesterday's high. Not so much to short against, but to see if we're breaking out to the upside, I think. And yesterday, the 2-day high, we really have a more clear high up in here. This is a more obvious high, but that's a pretty good run here. So this is a good enough marker for the time being. You don't have to, this is a little too far away to be thinking about. If during the course of the day we were pushing up above here, then yeah, I'd certainly want to know what this is. But we don't need it on our charts right now. Okay, so let's see here we go, 240-minute chart. So let me just put what I see here. So here we are on the 240. Since we're kind of getting short on time, I'm going to just go through it. And what I see here is we come down, still supply is dominant in here in the market. We do hit the oversold position, right? And we rally up, so that's good. We come back up above the 2-day low here. And that set the stage for the next day to rally up, to continue the rally, because we starting on a spring here down. But then this is the last day, that inside day. This is the day here, right? It's inside the range of the prior day, which is here. And so let's take a look at this. We have a little bit of volume in here. And as we try to go up, we have a little bit of effort to go up, but no real result, right? And then we close poorly. And so far, we're not rallying away from the spring line, right? I wouldn't quite say that we're hugging the lows at this point, but we're not rallying away from it. So what I see here is we only have one bar of buying in this. I don't see a larger wave to the upside here. And in fact, I see a smaller wave up in here. So I'd be cautious about the buying. And, now that we look at this, you've got the potential, if we do up thrust the high, that could be a nice trade, although you got support right here. So you've got but still, it's an intraday trade. It's got 10 points in it. So it's okay. So from that, I would be a little cautious about jumping into the upside, because it still looks, does everybody see this? That there still looks like supply is in here? Probably should have had you guys go through it, but I'm a little concerned about time. Yeah, it's visible. Okay, good. All right. So let's get to, before we get to the charts, next week we're on for Halloween, the 31st. And we will finish up October in that session. Okay. All right. So here we are. We're at 7 o'clock in the morning, give or take, the next day. Here's what happened on the daily chart. We did not hold that level, or this level, this low here. Remember, this was the low that we were looking at on the slide, right? The two-day low here, and it kind of came down and up and tried to spring it. This is not looking very kosher to me, or good to me, for anything to the upside at the moment, right? Does everybody see that? That's pretty important. Looks to me like there's more downside to get through before we are going to see upside. All right, and take a look at the hourly here. I clipped the volume. We've come down. I was looking at this earlier. I don't know, where do you put a trend line on here? Something like this, maybe. Are we breaking the trend line now? I don't know. I don't like this. So anyway, we've hit the 2-day low here, right? So we're now down. We're now bringing this line to there. So this is a repeat now from what we saw earlier. And I see a little bit of volume coming in here, stopping the market. So we've got a little bit of stopping volume in here, maybe some climactic action. Next bar comes up, which we would expect here. So far, I don't see a stellar rally coming off of here, right? And then we have the 5-minute chart. Let's take a quick look at this, crunch it down a little. Oh, let me put on what happened here. No, I don't want that. Where's the session break? Well, I'm sorry, I can't find it. Show session breaks. Yeah, it shows it. Okay. It's funny, it's not showing it. Oh, here it is. It's back here. Okay, so here we come down. This is the end of the prior day. We're just coming down from here. Okay, we're just coming down. So we're in a down move, and we've hit the 2-day low in here. Open this a little. All right. When you can't draw a channel properly, then sometimes the pitchfork works better. I have no idea how to use a pitchfork, and I wouldn't want to know. We just use trend lines, no pitchforks. But, it's up to you. Okay, let's get going here on this. For some reason, this gets confused in the Weiss wave gets confused in when we do the walk forward on this program for some reason. Little negativity comes into the market. Oh, for goodness sake, sorry. I didn't see this. So, what does this tell you here? What does this tell you in here? Can't go to demand line. Yeah, this is it's approaching. This is the supply line, remember, right? This is where we expect selling to come in. This is the demand line. It's where we expect buying to come in, okay? So we're up here. I see a little bit of selling here. I see narrow ranges in here, small price bars. Then this is a little bit of weakness coming in. So what this is saying is that we approach this and we go flat. We start going sideways rather than continuing up, right? We go from halfway decent price action to, slop and chop in here. So this isn't going to break through this resistance here. This is, if it's selling, it's resistance, right? And if it's buying, it's support. Those never change. So this is all saying that the resistance is having an effect here, okay? And then we see it drop. So now we get confirmation of that. What we want now is an opportunity to get up there again and go short if we get that opportunity. We may not get it. But look at this. See the clustering of closes in here, can't go down. It's holding on this line. So it suggests it wants to go up. Okay. But do we want to buy this? Well, no, probably not, because we only have this kind of headroom. We go from 73.5 to about 76. Maybe we push to 78, but we don't have any guarantee of that. We're likely to see this start to die out maybe around here, in here somewhere. And that's what we're looking for. We want to see this come back up on small spreads, light volume, and then see the market either find no demand up in here where we can short, or we start seeing supply coming in and we short. Okay. Notice not a lot of supply came in on this. The Weiss wave flips, and we are now about to push up. So now let's see what happens both in terms of spreads, price action, and volume. So that's that 5-minute bar. So far, not great. There's another 5-minute bar. Not very good either, right? Anybody want to short? Yeah, short it, says Brian. Here's your spot right here. Do you see? So let me just review this again for you. We come into support. That's great. We got, okay, decent move up until about here, or we see selling coming in. Then price flattens out. We're no longer going up. We see this kind of action, which is generally when we're near supply. When we're near a supply line, that means supply. We see supply. Now we come back up. We're looking for. We see the market hold here. We don't have a lot of selling coming in, but we're looking for a weak rally, and we're assuming that this market is now going to turn down from here and go. Okay, so let's see what happens. This is how we make trades. Rather than we know that down here, we know that the market's by this bar here, we know that there's a really good chance for the market to get up to here. Now we're looking for this kind of stuff to come in. Or it's going to break, right? This is the constant game we are playing. Okay, let's see some comments here. Brian says sell it. But price is making higher highs and lows, still in an uptrend channel. Weiss wave showing more demand than supply. Yep, but it's supply here. So the target. So now we're gonna come down. So there's like 3 targets here. There's one here, there's another one here, and then there's another one here. There's like a bunch of targets, and then there's another one here. Right? We're not going up here. We're likely not going up here. So we're going to at least come down to here. We've shorted at this point, right? I mean, we've shorted here. We can come at least to here or here, and we'll see whether the price is going to continue down or if it's going to start to back up. If it starts to back up, we get out on a small little trade, and we sit on our hands and wait for the next opportunity. Small little profit, I say. But we'll watch it and see. Now, notice how this is coming down. Is this going to hold? Probably not. So we don't try to take it off here. We try to keep it on, right? Yeah, there's a subtle climax on this last little run up too. Brian points that out. Yeah, good. Okay, so now we get, Mark is going to try to coming back up, but now look at what's happening. Look at how we approach this, all right? Now, we've got to be a little more cautious. Now we're seeing some shortening of the thrust coming in here, and I don't see a lot of volume coming in. So if this bar closes firm, I'm out. I would pitch this out, okay? But I'm looking for this to break. We'll just go through this in real slow detail. See you get this. Okay, that's the end of that price bar. This is no demand. Narrow spread here, can't really rally up very high. So we don't take the trade-off. This is not bullish, not necessarily bearish, but it's surely not bullish. Nice. And we let that close. We let this price bar close, and now we've gone through two targets. Okay. And we started off up here at around 74.5 or 5, and we're down here around 70. So we got 4 or 5 points in this trade now, give or take. Okay. Now we're coming to the next one. And this is a yesterday's low. So presumably that should, or a 2-day low, that should work to hold in here, right? So there's that price bar. Closes firm, but not above this. So let's see what the next bar gives us. Not able to rally off here. I don't really think about this too much, but a lot of people view this, the underside of a trend line, as being resistance. I don't really think about that, truthfully, too much, but some people do, and it does seem to work. So I bring that to your attention. You can kind of see for yourself. So here we are in this little bit of a down move here, and we saw a little bit of, again, maybe a little minor climax in here on the Weiss wave, but we've only gone sideways. So there's no strength in this market yet. So I'm now thinking probably the better target is maybe down here, because if there's no strength in here, most likely this is going to break. And we see that this 5-minute bar, how it's approaching, volume's increasing, good firm strength in this down bar. In other words, strength to the downside, firm close to the downside. Likely wants to break. And look at that, right? Next bar here, so we can take this target away. And now we've got a little less than about 8 points in this trade now, 7 points. We're looking to head on down here, okay? We'll watch now and see how this approaches. Well, look at this. It's approaching with strong bars coming down. So probably not going to hold. Okay, so it's going to, 5 minutes here, it's trying to hold in here. But look at what we've got now. If we kind of open this up, just for a second, kind of look back again here where we are. What we actually see is that this low in here was, this overnight was holding in here. And we've been in a big move to the downside from yesterday all the way down. So this now is consistent with all that we're seeing in here, right? Downside volume expands in a downtrend. This is not consistent with the downtrend. This, in fact, was effort to go up, and we come into support resistance, and it can't go. You know, it couldn't go up any higher. And you can see that on the hourly here too. Okay, so now let's. Oh, I'm so sorry, you guys. Yeah, okay. So now I will stop talking as much as I have then and let you guys go back into trading this. Let the price bars close. Don't try to determine what they're going to do when it's only 3 minutes into the 5-minute price bar. And look at that. Now, what do you think? What is this bar saying and what's likely next to happen? Selling climax and probably a pullback, says Brian W. Yeah, exactly. We see the selling climax occurring on the Weiss wave with the big, tall ending volume here, and the closing off of the lows. So some buying is coming in, and we expect, therefore, a pullback. Where might the pullback go to, would you think? $64, $65 area, yeah, right up into here. Let's see if we get that. Also notice on the hourly a little shortening of the thrust in here as well. Here's the US Open. You're out, Brian says. Okay. Isn't this interesting? 10 minutes spent trying to get over this level with pretty sizable volume, and it couldn't be done. And they just are pushing it down lower. Look at this. Look at the hourly now. So here's a breakout from the downside. You want to buy it? I'm sorry, not buy it, sell it. You want to short it? I never trade breakouts. I do once in a while. Notice, look at what's happening here on the, I don't know what the right trend channel is for this, but if I were forced to draw one, I would probably do it like this. Actually, I'd start with reverse use of trend line. Let me try this. That's probably the better line. Yeah, but look at this. I don't know. You don't really have a good trend channel here. But you can see it's getting pretty overcooked, right? It's not usually my game, but in this instance, it's justified. Yeah, it would be justified. You know why? I was going to say you can short it, but then I held off. The reason I say it is because we break this low after this is the 9:30 period in here, the 9 to 9:30. And 2 bars of full-throated U.S. open session volume coming in here and can't get above that. That suggests, and then this thing drops down, this suggests some more downside to go. And, if you had shorted this here, well, 6 or 7 points maybe. Not bad. Not a bad little trade. All right, let me crunch some of this down so we can see it. So here we have a little bit of shortening of the thread, very subtle, but this bar is showing some buying coming in, right? Now, we wouldn't jump in here and buy this in here because you've been coming down all day and night. So just give it a chance to let it consolidate. Less volume to the downside, but it's only 1 bar. It's funny how everyone was bullish on pre-market analysis and the market, of course, just tanked. Yeah. Well, not everybody was bullish. Not much of a rally there, is it? Now we see buying come in. And what do you think about this? Keep an eye on the hourly. Heavy, heavy volume coming in here, and it's not going down. This is like an early, we see big volume here, and it pushed the market down. Here we're seeing the opposite. Market went down, basically the same amount of volume, and it's pushing the market up. Market's starting to change its behavior here, and you can start to see it on the 5-minute. Now we're getting a couple of bullish bars together. We hadn't seen that before. We get one bullish bar and it drops. We get one bullish bar and it falls. Here we get a couple where they rise. Okay, these are the little subtle things that we look for because they're meaningful. keep an eye on volume as we come back into the lows here. It helps to put a line down there, I know. Look at this in here. Doesn't want to go down in here, right? And the response is a little bit of strength coming in. Brian says he'd buy this in here. Yeah. Market's going sideways and supply is fading. The market's testing down here and setting up a spring. So this is the next 5-minute bar. This is also okay to buy in here. You could, if you want to, you can wait for the next bar or two and see if it will come back into the middle of this bar where you can buy, but we're just going to put the thing on here. So you could buy this right here, right there, bang, 28.40, you'd get it 46 and a quarter. If you put a market order in right there, you have to be quick. Look at that. You're already in 4 points into the black. And you could buy it on the close if you want to. There's no, and I'll put it right here. I'll just put it right in there. That's a fine spot too. We're not, here's the resistance up here. So we're not right up against resistance, a little close. But if we're consolidating after a big long move, you know, our target, think about where our target would be. How is this approaching this resistance? Strong, right? Now you say to yourself, gee, I didn't get in at 28.50 because I felt like I could have got in around 44 and I gave up, but now I could have had another 6 points. You see, it doesn't matter. Yeah, valid break of resistance, right? So now what do you want to do? You want to look for an opportunity to buy, right? Yep, Brian says add to it here. And if you haven't gotten long yet, there's a good spot to get long at 54 and change. Yeah, Ted says buy this too. Absolutely. We see it rally right off of the way of the, goes back and tests it. If you were nimble, you could have bought it there. Oh, sorry, I wanted to go back to this. This is also another spot. Look at that test. I'm sorry, I'm going through it quick because I've got half an eye on the time here. But look at where we are now. If this is all buying, we have good buying strength coming in. Let me go through this in a little bit of detail. So we break down here. And we start to see a little bit of demand showing in here, but it doesn't hold. We would probably consider this to be preliminary demand, right? We come down here. This makes a more solid bottom. We start to see not only the shortening of the thrust, but we've got a little clustering of closes in here, and we have poor downflow, right? The downflow has gotten poor or bad. We rally up. I mentioned earlier the first time we've been able to put two bullish bars together and get two higher closes in quite a while. So these are the subtle signs that we look for. It doesn't mean that we get in right away. We have to let it evolve and unfold. The market comes down, more poor downflow and no volume to push the market down. And the market responds with good buying in here. We come back down, we do the full test, we get a spring in here, it gets a good response, we get a test of that spring, we push up, we have demand overcoming supply here. This is the first time we see in a long while that we have good buying volume entering the market. And before it was all supply volume, but that diminished as we came into the spring here. And not only did we get good demand over supply, as we come back, look at how supply, we get shortening of thrust, no big moves to the downside, and low volume. We rally back up. We start to rally back up, and just before we go up, because we've seen that other bar, look at this little test in here. It's picture perfect. An inside bar closing on its lows, light volume, right at support. Buy that thing. It's fine to buy it. And then that gives us this shot up here. All right. So now, one more. Let's see how this looks as we approach this. What do you think? Is it going to break? Oh, it did break, right? You see the difference now? I'm hoping you're seeing this because it's an important aspect to get a good handle on. It's really important. Does this happen every time? No, of course not. Sometimes we get, it'll grind through. The market will do what it does, but generally this is the way it breaks resistance and support. I'll just do this. Gee, Brian, you're going to have 30 points in that trade. There you go, 30-point trade. Remember that one that we took at 50? That was so high away. We were so far away from down below, we thought it was a bad trade. 50, we got 24.75 points in that trade. Not bad, eh? How about this one here at 55? We still have 20 points in this thing. So, when the things, you never know, you couldn't predict this, right? You can't predict this. You get a sense that if you're coming down in the Asian session and the British or the European and the first half of the American session, you're probably going to have a rally in the afternoon. It's probably going to turn, right? Because it can't keep going down. It's unusual to see it go down that much. As long as things set up properly, then go for it. You don't know if you've got a tiger by the tail or not. You get some, but if you've got this kind of situation going on where you've got demand overcoming supply and then a pullback on light volume, heck, take a shot at it. What do you got to lose, really, right? This is what we look for, and you might just get something like this. Let's keep going with this. I don't mind going over a little bit if you guys want to do that. All right, so now we're above the two-day low, right? And we got a little overcook there. So what do you think about this? Should we be buying this? I was targeting 68, but like you said, the price action suggests a high probability that it would continue higher. Brian says, yeah, exactly right. When we're coming into this, so you might have an offer out, right? A limit, an offer to close your trade. But if you see it coming up like this, take it off. Because you got, the chances are you're gonna go up higher. So we've got now demand overcoming supply. We get a little bit of supply over here, but that's most likely because it's overcooked. This is still a buy in here. This is at support. We broke it and now we've come back up through it. We're not unlikely we're going to go back underneath of it again. So buy this and let's see what happens with it. Not along yet. Time equals price, says Brian. Let it go until it digests this move a little bit more. Yeah, you could. You probably should view that. That's a good point. But I'm going to make a point. I'm trying to make a point here because I know generally what happens in this chart up here, although I forget exactly where it happens. So I'm looking for the move to, be a good one. And all right, so we're moving up. It doesn't look great. So I'm now starting to think maybe I'm not going to stick with this trade much anymore, right? I'm out. I'm gone. I scratch this trade out. Even if it turns around and comes back up, this is too weak in here. This is not bullish behavior in general, and it closes that way. So I'd be out anyway. There's no supply down in here, so we could try another shot at this. Why not, right? As Brian said, maybe it just needed to consolidate a bit. Now that's the end of that 5-minute bar. So if we didn't buy this, I'd be buying this for sure. Now we get something. Now it looks good. Yeah, Ted said you could buy that, no follow through. I think on this bar here, she was right. So that's not good. Yeah, that's not good. So I'm out right here. Okay. Again, just a scratch trade. We might have gotten 3 or 4 points out of it, but now it's coming back underneath. We don't want that trade anymore, right? Notice I haven't had a loss here. Yeah, out on the false break. Yeah, that's right. It's going to try again up in here, isn't it? Well, 3 times trying to get over this. So this is shorting it as it's coming down, but what I notice is that it's coming down underneath these couple of lows here. So it's not going to go back up if it's coming down below lows. So you can jump in like this and try to get a trade on as it's coming down, or you could do it here too as it's backing up. There, whoops, wrong one. You would short the no demand. Yeah, Ted says sell there. Where's our target? Right here. Down at 69 or so. We're out here right at 68 and we got in around 80. We got, there's a 10-point move right there. And as this goes down, it looks like it wants to break, except that we're getting towards the end of the day here. All right, I'm going to end here. So let's take a look at what we did here. We started off with the daily, which was a very difficult chart. When we looked at there were half of us wanted to go long, half of us wanted to go short. When we looked at the 240, because this was fairly unclear, it was pretty clear that there was a little bit of buying that came in, but nothing substantive, nothing substantial to want us to just jump right in at that moment to buy. So we could still see a little bit of supply in the market. And of course, that is exactly what happened. The supply did come in, push the market down. Now, we weren't tracking this, and it's hard to track this during the day on the daily chart, but we're not getting quite as much volume coming in to the downside as we were getting over here on this higher volume. And we saw on the hourly that it had been coming down all night, and through the Asian session and through the European session, we came in about here just before the American session started. And as I said, if we're down, or conversely, if we're up, 1, 2, and then I consider the morning session to be one session and the afternoon session to be a second session of the day. So if you're down the Asian session, the European session, and the first half of the American session, odds are really good that you're going to see some kind of a rally, or this thing just die out down here at some point. And that's what we did see. Tricky doing the trend lines in here, but we used a sort of reverse thing and got that idea going. And then on the 5-minute, I guess I did it a little bit more educational. We didn't really see too much about placing trades and stuff, but I wanted to make clear about how these, when we approach these things, when we approach support and resistance, and what we're looking for and where the spots are to be taking trades. Notice we didn't take anything again, we didn't draw any supply lines in here or anything, but we didn't take trades. We weren't looking for trades, we weren't buying up in here or up in here, trying to up in here. I did say up in here, but we were still in the middle of the trading range, and it was getting pretty clear that this was going up. I said this was okay. And this, we're at the top, but we've tested. This is a test of it after breaking it. So don't get confused that this is at resistance. It's not at resistance. This is resistance, and it's now support. It becomes support over here. And then we get some good moves up. And, we see this all the time, the daily highs and lows, and sometimes it's a couple of days. If they stick out like this, they're obvious. Look for the obvious stuff. That's what works best. All right, let's get to any comments or questions about this? And we'll get to the current markets. Yeah, the 240 really did help. I love the 240. I actually have the charts I watch during the day are, I have the daily up, but just on like a tiny little chart on the side. I have the 240 up, and all I'm interested in is the last 3 bars of the day, the 10 o'clock, the 2 o'clock, and the close. And so I'm only thinking about 3 bars on the 240-minute chart during the course of the day. And sometimes that can be helpful. But the main ones are the hourly and the 5-minute chart. 15 minutes, not bad either. Okay, so let's get to the S&Ps. The S&Ps. What is going on with these guys? We are, now we're in the middle of an impeachment process, and politics are still crazy in here. But let me just kind of reinforce what I'm seeing, or review what I'm seeing. Let me just get over here on the monthly. So when we're looking at this here, we made highs here, and we did it on no demand. Supply comes in, right? You see the supply. We come back up. We come back up to this high, and it's again on no demand. We head down. I thought for sure we were coming down, but it was just a shakeout, and it turned back up again. Not a lot of demand. That's the volume on that bar, right? Then we get this little thing up here, this narrow range, no demand bar. That's this no demand here. No demand bar sets up the selling that came in, but they're struggling to keep it up. They're trying very hard to keep it up above this level. Actually above 2160. This is last year's, somewhere in here is last year's high, 2961, I think it is. And so we sorry, I didn't finish this. Oh, excuse me. Sorry, I didn't finish. We come up again, no demand. And now we're approaching again on no demand. So we could go up to a little bit higher if we break this over here on the daily. We can go up to this reverse use of trend line on the monthly has been pretty useful so far. So it could go back up to there. I think some people are saying that it might do that with a point and figure chart count. We'll see. Weekly here is, we only have one more day to go, and I'm seeing with last week was no demand. This week is even more no demand, and so far on this week just narrow range. Now if we break out to the upside or the downside, we're going to get a wider range here. Now looking at the daily, so David pointed out the other day on his chart that there is this line here. I'm not sure how good this is, but he's got it in there. It's like coming off of these 2 points. In any event, we are certainly seeing some supply coming in here, and just really this is, we've been doing this all night, talking about here's resistance in here or in here. Is it going to break? I don't know how. So it doesn't look like it to me, right? So then, so I think, therefore, we need text and we need to stay in the, yeah, okay, we're good. So, what did I say here? That's crude oil. Oh yeah, this was. So I think 3015 is like the top of this. That's should hold in here. If it breaks, however, it's going to be right in here. If that breaks, then I would say 3035. Not a lot for now anyway, and we'll see what happens if it gets up there. And then we've got 2975 here, and if that breaks, I think we're going to probably hold in here. I'll show you in a minute, but let me just put this 29.55 would be the low, and I'll box these in later. We were looking a couple of weeks ago for this to come up and then come down. Well, it came up, and then I knew this wasn't going to hold, or had a feeling it wasn't going to hold, but I was trying to be hopeful. But it didn't hold in here. It went through, and we said 30.10 would be it, and it held for the last 2 weeks. That's pretty impressive that it held in here. And what I was looking for was a lower high. We may not get that. But if we do have the lower high and this rolls over, then that should be the start of something. Well, who knows what it would start. We'll see. I shouldn't say that it's going to be the start of something big. I'm guessing that when this resolves, it will be something big, and I'm anticipating to the downside. So that's what I see here. And this is tight because we're still in this trading range in here. And what I wanted to point out is this over here, 29.61 and change. This is the 2000 and whatever day this was, 2019. Is that right? May of 2019. Okay. All right. I thought it was a yearly high. I'm mistaken about that. Sorry. But anyway, this has been a access line that's been important. So we'll see if that will hold or not. Yeah, it does look like churning, Peter. And you got a lot of weakness in here. That's the S&Ps. Crude oil has had a nice break to the upside. And so that 56.5 is no longer going to be good resistance. That's going to exceed that. I'm thinking. Shouldn't say I'm sure. I'm just saying I'm thinking. So I don't see much to the downside here. 54.25 maybe. I don't even see that truthfully, but that would be where support would locate. And then for the time being, 60 to the upside. And we may not get there next week or the week. It may take a little bit of time to get there, but I think we're on our way to 60. So in other words, this should hold in here. It might come back in and test this vertical acceleration bar, which is fine. And we're probably a little overbought up in here anyway. And then that'll give us a chance to consolidate and move. But look at the monthly is good and the weekly is good. And I don't think this is going to reverse right down tomorrow. So I think that's pretty good. And then taking a look at the 10-year note, I think we still have, what did I say here on my notes? Yeah. I think we got more downside to go. So I want to say in here, yeah, 130.10 for resistance. Should be down in here. And then support, first support at 129.15, which is the lows down here. I don't think they're going to hold, but it's possible. But I'm assuming that they won't. And then it's 120. That's, yeah, 127 and change here, 127, say 10. Yeah, so I'm looking for one more, come back down in here and test this. This has gotten quite a run. No trade setups in here. And I don't really think there's a good trade setup unless you're doing stuff intraday until we get back down here. I didn't see this. This may factor into it as well. May, you know, no, I don't think so. I'm still going to stick with this. This is fine. All right, that's it for me tonight. And I hope you guys got something out of it. This was a tough chart, but I wanted to detail it because I thought it was kind of based on the person who had the question tonight, the member who had the question. I wanted to try to use these charts as well to help clarify this as best I could. So hopefully that happened. Have a great weekend, everybody, and a really good trading week next week. And I will see you for Halloween next Thursday at 8 o'clock. All right, everybody, take care. Have a good one. Bye-bye now.